In this video, I'm going to share with you my top 3 property strategies. Listen to them because I think these 3 are the best when it comes to property. I was recently asked what's my top property strategy and what are my top 3 property strategies. And I was pleased somebody asked 3 because kind of choosing just one isn't a good idea, because I think it's important that if you're in property, you diversify and don't rely on one particular strategy, because what's a good strategy today might not be such a good strategy in 2 or 3 years time. And if you expend all of your energy and resource into that particular strategy and then it stops working well, it's going to then be harder for you to change over to something different. And it's good to diversify. If one's doing well and the other one's not doing so well for the time being, that the one that's not doing well might start doing well later on. So to have a diverse portfolio, whether it's property, business or investing, I think it's incredibly important. So the number 1 strategy, if you've been watching any of my videos, for me is commercial conversions. Simply put, this is where you buy a commercial property and then use permitted development rights to build or convert it into flats or apartments, or buy commercial property and then obtain planning permission and then convert it into flats. And the reason why I love this is because you can very quickly scale up. So you can imagine, let's say if you buy a building which is 8,000 square feet, and without going into detail of exactly how it looks, you could quite easily get 10 to 12 flats there. Again, depending on the size, you can fit in more, by the way. And I'm not into creating real small rabbit hutches. I like to create big space because that rents well and it gives us better rental income, and the tenants tend to stay there longer. But let's say you can get 10 to 12 flats. So you can see very quickly you're going to start accumulating a good amount of properties and creating some real positive cash flow on a monthly basis. With the pandemic, obviously there's lots of offices that are empty. Some businesses aren't going to go back, and what that means is there's a good supply out there of commercial property and some really good deals to be had at kind of really good discounts, very, very good discounts. So that's going to make it even better for you to look at. Conversion isn't that complex. I mean, once you've done anything, nothing's complex, by the way. It always appears complex when you're first starting off, or when you're doing your first 1, 2, 3 deals. After you've done them, nothing's difficult because you know how it works. But generally speaking, conversions are nice, neat and tidy as long as you buy the right type of building and you've got the right type of contractor. So that works well. I like that. When you're buying commercial property, non-residential rates of STLT are lower anyway, so you've got a benefit there. It's a well-trodden, known marketplace, and there's lots of investors and joint venture partners who are happy to invest in conversions. So that works really well. Once you've converted, you can very quickly and easily refinance. You don't have to wait around for 6 months or longer to refinance the deal. The added value there enables you to pull all your money out, sometimes a bit extra on top. Every time we've done it, we've been able to get some money on top, which then creates extra cash flow to use for further deals or to rely less on external investors. So those are some of the reasons why I really like commercial conversions. You can do it pretty quickly as well. You see a property, you buy it. It might take you, let's say, 4 months to buy it. It could be 6 months, could be 3 months, but let's just say could be 4 weeks if you've got the cash in your bank, by the way. But let's say it takes you 6 months. Alongside that, you can go for, if it's qualifies for permitted development, you can do that at the same time within 56 days. That should come through. You can then start work pretty quickly. So within 15 to 18 months, you can, just from start to finish, all sorted. And I've got some videos here on our development on Boston and also New England. Boston took, I think, 10 or 11 months in the end. New England took 10 months. So that was just the conversion work, and then obviously the purchasing and everything else I added on to that. Both of them didn't take 18 months start to finish, although on the New England club we parked it up and then we went back to it. But had we done it in one go, it would have been less than 18 months overall. So that's commercial conversions. Secondly, one that I don't do that much but I've seen work incredibly well, and I would have it on my list, and I would do it if I had the time, but I'm doing other stuff, so it's not as appealing to me right now because there's no need. But if I were to do another property strategy, it would definitely be service accommodation. I think it works incredibly well, fantastic cash flow, you get it in the right area, you'll get lots of guests, visitors, tenants, call them whatever you like. Section 24 isn't impacted on that. You've got the ability to claim capital allowances, you can make contributions into a pension and use a SAS. That works incredibly well. So there's all of those kind of tax advantages which work well. You can obviously claim business asset disposal relief, which is entrepreneurs relief, without heavily focusing on the tax side. From a purely cash flow point of view, I think service accommodation is really good, and the units that I've seen my clients create are fantastic, phenomenal. They're better than hotels. So definitely a very good strategy. Can be hands-on. You can obviously do rent to rent, or you can give it to an operator to work on or look after it for you. But if you're full-time into property, I'd say run it yourself, because then you can obviously keep all the costs so that you would pay to an operator. And it's a really good business, really good, especially from a cash flow point of view. And you can also build equity as well. So that's the second one. And the third one I would say is BRRR. So buy, refurbish, refinance, rent, and that works incredibly well. You don't need that much money to get started. You buy a property ideally below market value, renovate it, and then you can either sell it and make a gain, or refinance and then put it on rent. You've got the asset there, plus you've got the monthly cash flow that comes in. So those are my top 3 property strategies. Alongside that, if I was to add a fourth one, which would really be the second one, would be buying land either with or without planning and then building on it. That's my next development, which is in Bicker near Boston, and I'll be making more videos on that as soon as we start work in the coming months, so keep an eye out for that.